What's up, everyone? I am 7-Star Mike, and today I'm going to show you how I manage a trade with a live chart. Now, this is a little bit long, but I did cut out any of the parts where nothing was happening and I was just staring at the chart. So if it's left in the video, it's something I'm talking about, and this is exactly the thought process that goes through my mind when I'm in the trade live. So take a look at what I did with NVIDIA today, see how I managed it, and see if this helps you with your trading. All right, we're looking at NVIDIA here. You can see when you change this, we had pre-market resistance here, pre-market resistance there, and then once the market opened up, we had some support all in here, support all in there. We breached that, we came back. So what we're looking for is to see if this level will hold here, and if it does, I'm going to take a long position. If it doesn't, I'm going to go short. And I'm going to look at the weekly contracts, and I would go right at the money, maybe the first one out of the money. Right now I'm looking at the 225 puts, and we're going to watch and see what this candle does here. If this candle doesn't hold that support, I'm going to go ahead and open the short. I don't know why I did that. Connect, I need my charts. If this candle does hold here, I'm going to look at the 227.50s for a long. So this one, and I'm liking the short here. So we're going to go with the 225.50s. Fill is 455 on the weekly 225.50 puts. And this is going to be an easy exit. If it cracks above 225 again, maybe we give it up to here, this resistance area here, maybe a little bit higher. We're going to exit the trade. First thing I'm going to look for is some pre-market action. So down here we had support at 221.31. So if we get to that level, we can put a line there. Maybe we take the position off. That would be a nice 3-point drop. That would be a good move. That would probably be about 150 bucks per contract on this particular trade, which would be roughly 30-something% maybe. A little bit less, maybe 25. I'm so bad with math, so I don't know. But that's what we're looking at here. So if this candle, you can see it came back above it. If we get somewhere up here, we'll just close out the trade. It should be a minimal loss. If we get down here, this pre-market support, we want to see what it does there. And then we'll kind of monitor the trade from there. So that's what's going on. We are in the 225 puts, and we're just going to monitor it right here and see what we have. You can see we're right about where this level is up here, this resistance level. This candle wick hit that and rejected a little bit, so we want to see what it's going to do in that area. There's a few things I'm looking at in the market. If my other charts will load, I do have multiple monitors, so I'm looking at a bunch of stuff at once. There's a few other things I'm looking at that show a little bit of weakness. So let's see if we can get this 3-point drop on NVIDIA here. If not, we're going to cut it right about, like I said, this area here, resistance, maybe this wick here. That's where we're going to cut this if we need to. But let's sit in this for just a little bit and see what happens. The thing about trading is that it is all mechanical, no emotion. You've got your entry, you've got your exit spots to the upside and downside, and you just monitor the trade and see which one it hits. When it hits one of those levels, you close it out. Nice and easy, no stress, no pressure. Set your levels and just wait for one or the other to hit, and then close the trade and look for the next setup. That's what trading's all about. And it's popping above here, so we're going to go ahead and look to close this out. Right above about 227. And this is what trading is. It's just a big waiting game once you're in a position. So you enter the position, you just wait for your upside or downside targets to hit. It's a big waiting game. There isn't a lot to do once you're in a trade. Some people think trading's super exciting and constantly, no, it's just enter the trade, have your upside downside targets, and just sit and wait for one to hit. It's actually a pretty boring profession, but it's fun because You get to set a plan, let the plan work, and when it does, again, even upside or downside, if you're wrong but you stick to your plan, it's still fun because you had a defined trade and you let it work. So this one we did reject up about that upper level of resistance there, and we are coming back down to this pre-market. You can see over here, pre-market high. Didn't quite touch there, but close enough, and it rejected there again. We came back down to that level. So now we're going to see if we can hit this $3 move to the downside. What could happen is this area of prior resistance could act as support like it did here, and we'll see if it bounces here. But again, I'm liking it to the downside, looking for 222.35. If we get there, we're not necessarily going to close it unless we get a bounce off there immediately. Because this was prior support, we're going to look to see if it becomes support again. And if it does, we'll close out the trade. If it looks like it's going to push right through, we'll hold it open. It's just a monitoring game. Once it gets there, we're going to see what it does. We're not going to panic sell. We will watch to see what the price action is showing us once it gets to that level of support, if it gets there. I can't say that it is going there. I wish I could see the future, but that's what I'm looking for, 222.35, which again is this pre-market support, pre-market resistance. So once it breaks below this resistance, I want to see if it goes and touches that support. That's the trade plan. We're going to exit if it gets back above this 227 area. And at this point, again, it's just a waiting game to see which direction it goes and which level it hits first. Ooh, let's go ahead and fill in. Boom. Let's go put that on the screen. Didn't quite fit the formatting, but there it is on the screen. You can see NVIDIA puts at 455. I'll have to fix that layout there, but that's what we're looking at. And we're getting a little pop here, so we're going to look to close this one out in just a moment if it clears that 227, but we're going to give it some room. We're going to give it some room because it can move, it can bounce around a little bit, there's a little bit of volatility, so we're going to give it a little bit of room to see what it wants to do. We're not going to panic sell, we're not going to panic open. Nice and calm with our trading. So remember, most of trading is just monitoring your trade. It's a lot of boring sitting around and just setting your levels and waiting for one or the other to hit and then closing it out. So we do very little work throughout the day as far as putting on the trades. Then once they're on, it's a very boring profession. You just watch and monitor most of your time. As a trader, that's what I'm doing, sitting and waiting for a setup. And once I'm in, sitting and waiting for one exit to hit, top or bottom. And in between, not much going on in between. I do have multiple monitors, so if it looks like I'm not super focused, I'm just watching a bunch of different things in a bunch of different directions. And we're getting closer to that area where I'm looking to cut, so we're going to watch closely. We're going to get the sell order ready, but we're not going to push the button just yet. We're going to watch and see what it does in this area. Remember, don't panic sell, don't panic buy. Monitor. So as we get close to this area where I'm looking to cut, I'm just going to have the sell order ready to go, but not pushing the button just yet. We're going to see what it does around 227, see if it pushes through that or rejects there. And we're right there at that level, so again, we're going to monitor it closely as it touches that level, see what it wants to do. There's a little push down there. That candle turned red for the moment. That's why we don't panic push buttons. Not to say it won't go right back up there and close for a loss, but we don't panic push buttons. It's a nice long upper wick. That's what you want to see if you're in a short position. But again, ultimately, this pre-market resistance here, we don't want that to be support here, so that's what we're looking at. I definitely want to see this below 225. Pretty boring, huh? And again, we're approaching this upper level limit here. So we're just going to monitor, see what it does when it gets there again. No panic sells. We're going to calmly watch what it does when it gets around 227, and we'll make our decision as we see the live price action. All right, now we're approaching that level of pre-market resistance. We want to see it drop through that level and not act as support again. And then again, looking for 222.35, which is this pre-market support here. Did have a little bit of support in here in 223.56. You see it was support over here and support over here. So we can see if it drops, we can see what it does when it gets there. We can even put a line there just to make it easier for you guys to see visually. A little bit of support there, not quite support there, so that's probably not a strong line. So I'll get rid of that one. I'm still looking for 222 if we can break this 225 area. 222.35 is the first target. But we've got to clear that 225.20 to the downside first. You can see we just broke through it, but this candle hasn't closed yet, so we have to see what this does. And this is what monitoring live price action really is. We're just watching the highs and lows of each candle, where they open, what they do before they close, and where they close. That's all pertinent information as far as what the buyers and sellers are doing. So now in the early, or the regular market hours, this wick right here, that is 224.40. That's the low point of the market session, so that's the level we're going to look at to see if we can break. That would be the first level of support we want to see it break once the market opened. Actually, no, this candle here, this opening candle, that's going to be the low, but we still want to see that level, 224.40. We want to see that level break. You can see right there, we kind of hit it and bounced right off of that level. So that's what we're looking for. 222.40 is the next level we want to see break. And it just did there. What we're looking for is continuation. It would be great if momentum came in behind it. But remember, the name of the game is waiting. So we're just sitting, waiting to see what happens at these levels that we've marked. Right now, this is about where we entered the trade. So we're red just a few bucks. So if we can get that drop, we'll be about 100 to maybe 150 bucks profit per contract if we go all the way down to this 222.35. So now what we want to see is this pre-market resistance that became support. Now that we're below it, we want to see that act as resistance if we get up there again. But of course, we'd prefer to just go straight down to 222.35. We'd like to see continuation and momentum. Those are the two keywords, continuation and momentum. You can see we're just kind of consolidating over here for a little bit. We've got 1, 2, 3, 4, 5 candles where it just kind of held that support level there. This one here, it's coming in is breaking it. So that's a good sign. There's a little bit of momentum, but that's just a wick. This candle hasn't closed yet. So again, just watching live price action. Remember, that's about the area here. This was a little bit of support. This was a little bit of support. So 223.50 we'll watch. I think that's going to be a weaker area, but we could get a bounce there. And then 222.35 is still the ultimate target number one. But you got to be flexible. So even though you have a target of 222.35, you got to watch price action. So it might not get there. It might get there and plummet through. It might get there and bounce. So you can't have really predetermined actions in mind. For me, it's more about once it gets there, if it gets there, watch what it does and make a decision based on that information. Because it might get there and plummet right through, right? And in that case, you don't want to close out the trade. We're going to look for it. We're going to monitor it. And there's a good candle there. So this is the first level of potential support where we might get a bounce here, right? So we're going to monitor it here. Contracts are currently up about 40 bucks. So again, if we get that drop to 222.35, that would be about another 50 bucks just looking at the delta. So that's where I got my 100 to 150 per contract estimate of what this trade would do. And we're getting a few red candles back to back here. Again, I'm in the weekly 225 puts. So I was in on this break here. We had a wick down, came right back up. The next candle came in and was red. So that's where I entered. So I actually entered at probably the worst spot. But I like how this wick came right back up and the next candle came right back in and rejected that level. So it did work against us for a little bit. Now we're coming down to this 222.35 area. The entry on those was 455. The bid is currently 535. So if it drops to 222.35, that might be my $150 estimate per contract. It's looking like it's going to be closer to about just $100 per contract. But we'll see what happens when it gets there. Now you can also say, hey, we're close enough. We're about 30 cents away. If you want to close them out and not wait for the actual level to touch. Some people like to do that. Here we are 2 cents away, and these contracts are $5.55 on the bid. So there's $100, and we just touched that level. So if you close them out here, the bid is $5.60. So we're going to close a little bit at $5.60. $5.65, and then we're going to keep some open to see the next target down. So the next target down would be maybe this area here. This was a lot of support in the after-hour session tomorrow, or yesterday. So let's put a line there. 220.98 would be the next level down. So 565 was the exits for the first batch. Let's go ahead and get that in there so we don't forget. At the end of the day, all the trade confirmations are kind of busy. So let's just add that in there now. Let's actually clean this up a little bit. Let's make it a little bit easier to see. So that's the trade. Most of the trade is off because my first target was hit. So now I just have a few runners, and I'll let those move around a little bit. So let's say we're going to close the runners out when it gets to this level here. So this was the pre-market support, pre-market support. So let's just go ahead and put a line there. That's not where I wanted it. Let's go ahead and put a line there at the bottom of that support. So for the position that we have left open, if it hits 223.51, we'll close those out. Those should be profitable as well, which means the entire trade would be profitable. The first batch was up $110 per contract. So if these, let's say it bounces and gets to this level here, let's say those are only up 40 or 50 bucks a contract, you still made good money on the ones you left open after your first target was hit. So you made less than your first target, but you still made a profit on those. So overall, that's a positive trade, and I will take that any day of the week. So again, now it's just a waiting game to see what happens if we get to this level or this level here. So this one here, since that's no longer a trade level I'm looking at, let's go ahead and delete that. So our new levels is this one here is where I'm going to cut, and this one here is where I'm looking for target number 2. So again, I'm just adjusting the levels as the trade progresses. Remember, there's no stress when you trade like this. You have a level, upside and downside, and one or the other is going to hit, and that's where you close the trade. So you know ahead of time about how the trade is going to perform. So now we're breaking that pre-market support again. We bounced above it for a little bit. Now we're back below it. So again, let's zoom a little bit. This after hour session yesterday was solid support. That's 220.98. So that's where I'm looking at for my next target. And remember, if it retraces back to this level, that was minor support. I don't consider this really a huge level of support, but it was a little bit there. So just to lock in profits on the ending of this trade, I'm going to keep that as my exit. I'm not going to let it go all the way back to where I bought it for. I don't want to take a loss on the runners. And at this point, it's nicely profitable. So to let it go all the way back to break even or a loss, to me, that's not acceptable. So I'm going to move the exits on the runners to this minor level of support in here. If it clips that, we'll just close out the trade and start looking for the next trade. So we've got 455 to 465 on the bulk of the trade, and there's just a little bit left in case it wanted to go to target number 2. So the way I trade is most of the trade is out at this point. Locked in those profits, most of it is out, just a little bit left to see if it wants to continue to your next target level. And if it doesn't, I'm going to cut what I have left. At this point, I'm going to cut them here, which would still be profitable. Remember, the entry was up here. So as we breach that and made it to our target number 1, I'm going to move the stop on the remaining ones to a profit target of, that one is going to be, looks like probably about $50 profit on the remaining runners if it gets stopped out there. So $100 per contract on the first batch, $50 contract profit on the second batch if we get stopped out here, and it looks like we're going to. Well, it doesn't look like we're going to, actually. It looks like we had some momentum up to that level. So you don't want that preconceived notion of it looks like we're going to get stopped out. So I don't like how I just kind of jumped to a conclusion there. What you want to do is watch what happens when it does get there. Had a nice green candle here, a nice follow through green candle there, but then we got that wick. So again, you don't want an idea of what's going to happen in the future. I'm pretty good about not doing that, but there. So you can see this candle came in green, spiked up, and now it's red again. So that's why I don't like having the idea of it's going to do this or it's going to do that. I like to watch real time and see what's actually happening. And with this nice drop, we were here 226.56, down here 222.07. So that's a $4.50 move. So you could expect at some point there's going to be a bounce in there. So we did get a nice little bounce here after we hit this level, which was our first target. We did get a bounce there, but we're going to wait and see if we can get a little bounce and then continue our leg down to this pre-market level here. And again, if we just hit this level, which was a minor level of support in early hour session, we're just going to stop out the rest of the trade and move on to the rest of the day. Nice and simple. You've got your upside target, you've got your downside target, and you just wait for one or the other to hit. That's what trading is all about. Sometimes I keep my phone away from me because I do get distracted easily. Now we're back to the boring waiting game to see what happens. You can see that candle wick there. The low so far went right to that level of pre-market support and bounced a little bit, but again, we don't trade on wicks, we trade on confirmation. And remember, the reason for the entry, let's zoom in a little bit. This candle here, this wick broke support, and then we closed right back above it, but the next candle came in and dropped right from there. So that's why I took the entry there. It did go against me pretty much right away, but I had this level up here as a resistance. We never really got there and pushed through, so I stayed in the trade, and then we got our downside move there. So pre-market support, that was our target number 1. After our session yesterday, that's support, that's target number 2. And there's just a few contracts left to see if it can get there, and if not, I'm going to stop them out here, which was the pre-market support. So again, you want to draw out your levels and just let the trade go from one to the other. Whether it's upside or downside, I don't know ahead of time. I wish I could see the future. But you've got your levels to the upside and downside set, and one or the other hits, that's where you close the trade. Nice and easy, no stress, no emotion, just mechanical. And here's some downside coming in again. The bid is now 575. Remember, our entry was 455. So not a bad trade. There's some momentum coming into the downside. The bid is 590. Now the entry was 455, so depending on your account size, you want to take a number of contracts that's appropriate. So if you have, let's say you have a $5,000 account and you put one contract in there, that's about 10% of your account. So you don't have a lot of wiggle room for that to go against you. So you don't want to take a $5,000 account and put 10 of these contracts in there. That would be your entire account. So while the trade did work out now, it did go against us at first. So it went against us by about $100. So if you put your entire account into this and bought 10 contracts in a $5,000 account, you'd be down about $1,000. That's a pretty big hit to a $5,000 account. So you have to manage these trades, the size, according to your account balance. If you have a $5,000 account and you bought 10 contracts and you're down $1,000, you might panic sell because you're thinking, oh my God, I lost 20% of my account. But remember, mechanically speaking, no emotion, this level of resistance here was what I was watching and it didn't hit that, so I stayed in the trade. So if you have too big of a position size, you might be tempted to panic sell out, whereas if you position size accordingly, you can use that mechanical level of resistance and it didn't hit, so you stay in the trade. Whereas emotionally, you might want to close out that trade because you're focusing on the dollar amount. So very important to position size these according to your account balance. And now we're back to just the boring waiting game. It's between levels. We're not going to close it out yet. So we just sit and wait to see which next level hits, to the upside where we stop out, or to target number 2, where we won't close the whole position, but again, we're going to monitor and see what it does when it gets there. So at target number 2, which is down here at this 220.98, we'll probably close most of what's left and maybe only keep one more contract to see if it hits target number 3, which I don't have laid out yet, but if we get to target number 2, we'll go ahead and look for what target number 3 would be. The bid is now 605, so you're now up $150 per contract. Let's do the math on that. I will use a calculator because I suck at math. So 150, the contract entry was 455. That's a 33% gain. So as of now, you're up 33%. I do like my trades to go about 30% or more. Anything less than that, and you're kind of struggling to make, I mean, a 20-25% gain, sure, those are all nice as well. And if you're in a trade and it turns against you, will lock it in for a 10 or 5% gain rather than let it go red. But I do kind of like my trades to be about 30% or more in general. If you don't get 30%, to me, it's almost like you had a bad entry because you didn't really have enough room to make the trade work for you. So these just hit about 30%, so I'm happy with that. Still have a small position left, just waiting to see if it hits that support level that was acting here for a little bit and here for a little bit. Again, it's not a super strong support level, but that's where I'm going to stop out so I can lock in profits on the runners rather than let those go back to even or red. And if we do that, we still have a solid gain because we had a nice gain on the first batch, and we'll have a little bit of gain on the second batch. And again, we're not going to panic close anything, but as we approach this level where our stop is set, we're just going to go ahead and hover over the button. We're going to get our sell order ready. We don't have to panic out, but we are going to be ready to close it if we should cross that level there. So again, that level is 223.51, pre-market support, pre-market support. We're right up there now, so we're going to get our finger over the sell button, but we're not going to push it just yet. The bid is now 505, so you can see those contracts moved dramatically against us from where they just were. But remember, this is the very small position because we closed most of it at target number 1. So the small position is still going to be profitable if we exit where our stop is set. Our big profit was on target number 1. So you can see we're touching that line now. We're actually above it now. So if this candle closes around here, the bid is $5. So this next candle, you can see, let's zoom in a little bit. We closed above it. This next candle came in. It's below it now. So again, we're not going to close this position just yet. But if this candle goes above that level, that's where we'll look to close out the trade. And at that point, the trade will be done. Those were the runners that we're looking at now. So then we'll just move on to another setup. So if this candle comes in above 223.51, we're just going to close out the whole trade and move on. but I want to see what it does there. So again, we're watching price action. We're not having hard stops set where if it hits that price, it's automatically taken out. I don't do hard stops. I have the stop in my head and I'm watching the price action, because if it hits there by a penny and then rejects, you don't want to be taken out by a hard stop. Now, if you walk away from the computer, you do want a hard stop in that case, because you're not there to monitor it. Since I'm in front of the computer the whole time, I'm going to actively monitor these trades. So I don't do hard stops. I basically watch it and manually exit. I do have the discipline to exit where I want to exit, so that is key. If you don't have the discipline to exit where you first say so, then you want to put hard stops in there. In that case, the computer is going to do the work for you and remove the emotion. For me, at this point, I'm pretty disciplined to exit where I want to exit, so I don't do hard stops. Just in case we do breach that level by 5 or 10 cents and then reject again. I don't want to be taken out by just a wick. So I do use manual exits versus hard stops. And that's exactly what happened there. If we zoom in even further, you can see this candle broke above that level. This wick broke above that level, but literally by pennies. And then we're back down below it. So you don't want to be taken out by a wick. And where you draw the line here, if you drew the line at any of these candles or these candles, it would actually be a little bit higher. So I just chose the lowest point of this section here, which is about where it was here. So it's not an exact level. So you want to give it a little bit of wiggle room. And you can see we're on the downward move again from there. So you wouldn't have wanted to be taken out by that wick that broke above it. And the bid is now 530. That's a big move to the downside there, relatively speaking. Not a huge move, but that decent sized candle that just came in there. This is trading, guys. This is boring, but this is how it's done. Let's zoom back out so we can see target number 2 is this aftermarket session yesterday. We found a lot of support here. So that's why 220.98 is my target number 2. And remember, I just have a small runner position open. I closed the bulk of the trade at target number 1, which was this pre-market support here. So if we get to this level, what I'll do is close most of the runners and just probably keep a single contract open for target number 3, which let's go figure out where it would be. I do have 217.84 because that was resistance that became support, but that's a little bit further down. Resistance somewhere in here as it was consolidating, so maybe somewhere in the 220 area would be target number 3, which would be about $1 down from there. If you just get solid momentum, 217.84 would be awesome, but it's not really what I'm looking for at first. First, we need to crack this level here, 220.98. That is our target number 2. Let's see what happens as we approach that. Checking text messages. Normally I listen to music while I trade, but since this is going to go on YouTube, I can't have music playing in the backgrounds because they will have a violation for copyright infringement. If I do this again, maybe what I'll do is have music in a headphone, because it definitely makes the trading day go by much easier. You can see how boring it is just watching candles go up and down. So music definitely helps. There we are at a low of the day, so again we want to see if that level breaks and we continue on down to 220.98, or to see if this level is going to act as support and we get a bounce there. We can zoom in a little bit. You can see this low right here, this candle and this candle, they're all within a few cents of each other. So we want to see if that's going to be a low for the day and we bounce there, or if we can break through that and continue on to target number 2. And that candle there just made a new low. So we're going to look for continuation down to 220.98. Again, that's target number 2, which is this after hour session support from yesterday. So that's where our next target is. Target number 1 was the pre-market low. We hit that. Target number 2 is the after hour session support from yesterday. We're going to see if we can march down that way. Again, the bulk of the position is out. We're just in a smaller runner position to see if we can hit target number 2. If we do, and we bounce there, I'm going to close most of it and just leave a single contract left to see if we can hit target number 3. But most of the position will be off. Just a single contract left. The only thing that would change that plan would be if we just plummeted right through that support level. So if that didn't even hold for a split second, then I wouldn't close out the position just yet. If it hits that and looks like it's going to pause or bounce, I'm going to close out everything except one contract. And that last contract, I'd probably put the stop right over here, because you can see how this level here was support this whole time in here. So if we hit this target number 2, I'm just going to leave one contract open for target number 3, and the stop would be this level here. But currently we are still in the runner position, and in fact I might just close it out at this level here. So this is the pre-market support for today. If we cross above that, I'm just going to close out the runners and move on to another trade, because this one's moving a little bit slowly at this point. The bid is currently 585, so at this point there's no reason for it to go all the way back up here. So we're going to get rid of this line. I'll put the stop on the runners at 222.35, and that way we protect more of the profits and we're able to move on to another trade. Ideally, we actually move this up to the wicks of this level here, so 222.65-ish. That will be the stop. The top of this portion here. Let's make it easier to see. Let's put the actual line there. That's going to be our new stop. So this one here we'll get rid of. So on the runner position, those wicks there were resistance. So if we clear that level, we'll make that the stop for the runners. 220.98 down here. That's still the target number 2. And if we hit that again, I'm going to close all but one for target number 3, which I'll figure out. I have a target number 3 down here, 217.84. That's pretty far away. So there's probably something closer to this level of resistance here, 219.76. Maybe a little bit resistance on that candle, kind of consolidation up here. We'll see where we're going to make that third target. But for now, we've got to stop at 222.66 on the runners, and target number 2 is 220.98. So again, we're just sitting waiting for one of those levels to hit, and then we manage accordingly when we get there. And we're at that level with some momentum, so we're going to go ahead and close this out here. We are at, where did we fill? $540. So let's get that marked. So that's what we're looking at. That's how we managed the trade from start to finish. We had our levels to the upside and the downside. All mechanical, no emotion. You've got your upside targets, you've got your downside cut level, so you know the loss you're going to take as you get into the trade. It's not exact, but you know roughly what your max loss would be, so you position size according to that, and then you just wait for your levels to hit. If it hits your cut target, you cut the trade. No emotion, no thinking, well, if it hits this level here, but then maybe it gets to the next level, and maybe it's just a wick. Stop going through that big analysis. You have your cut level. If it hits that level, cut. And then as far as profits, you have your target number 1. When it hits that level, you trim your position. For me, this is basically most of the position comes off, and then I left a few on to hit target number 2. It hit, actually it didn't hit target number 2. It retraced back to a level where I wanted to cut those runners, and you can see that was a good level as of now to cut because we kept going through that stop loss level. So it could reverse and come back down and hit target number 2. Who knows? But I locked in from 455 to 465 on the bulk of the position, and then the runners at 540. So not a bad trade. They did hit over $6, so you can see we didn't peg the top, but as a trader, our job isn't to time the tops and bottoms. That's not going to happen. If that's what you want to do, forget it. Change your mindset. You're not going to nail the tops and the bottoms. So the top of this contract was 6 or 605 even, I think. We got out of 565 and 540. So nowhere near the top. but our entry was 455. So still a good trade, made some good profits on this one. And now we're just going to close out NVIDIA and look for the next trade. That's how I manage my trades. Maybe I'll do this again. What I would like to do next time is actually have the options grid, the options chain on the chart, so you guys can see how it moves with each of the levels that it hits. And maybe I can black out the account numbers and bring the actual account into the screen so you can see the fills live. That's how I manage trades. Hope you guys had fun. Hope you learned something, and I'll see you next time.